Hi, good evening, everyone. Welcome to this webinar brought to you by Bursa Malaysia and managed by LifeChamp. Today, we are very excited for doing this webinar titled Utilizing the Power of Warrants Safely. I am Stella, and I will be your moderator for today. Are you familiar with warrants? They are powerful tools for stock market investing, offering exciting opportunities along with risks. Warrants, when used wisely, it can help you to profit from the market fluctuations. Today, we are very delighted to have the founder of Shareworld Consulting, Mr. YC, to share with you how you can safely harness the power of warrants to enhance your investment returns. So, without any further ado, let me share with you a short disclaimer. Please be reminded that all the information shared in the webinar is mainly for educational purpose. So in no way that we will give you any recommendation to buy or sell any securities that we are mentioned here. So if you decide to make any investment decision, you are 100% responsible for all your investment risks. Now, allow me to briefly introduce our speaker. Mr. YC is the founder and chief trainer of Shareworld Consulting. He applies technical analysis in trading, analyzing stock trends, price and volume analysis, indicators, candlestick patterns to observe the buying interest and selling pressure to determine the support and resistance level. With a background in finance and accounting, he has successfully transitioned from fundamental analysis to technical analysis and invented his own trading strategy. He has also completed all the levels of ICAEW and Certified Financial Planner, and he has passed the CFA exam for level 1. Let's welcome YC.
Hello, everyone. Okay, so if you can hear me, please type 1. Please type 1 in the comment zone so that I know you can hear me. I'm able to start my presentation soon. Okay. I've seen quite a lot of responses. Okay, so a very good evening to all of the audience. So today we are going to talk about warrants. Let me share my screen first here. Okay, so today we will be sharing about how to utilize the power of warrant. Okay, so as what Stella said, this presentation is not buy or sell call. It's mainly just for the educational purpose. Okay, so I basically started with a financial background, but in the end, I realized that in Bursa Malaysia, with the technical analysis, it will be quite useful in making profits in the stock market. That's why after that, I focus more on the technical analysis, which we always call it TA. Okay, technical analysis, short form TA. Okay, so basically is that through TA, we were able to find the major support or resistance of a stock. Okay, so today this is our we call the flow of it. We will be learning about the technical analysis first. Then after that, we will be going into the warrants. Then I will share with you how to differentiate company warrants and structured warrants and learn different types of strategy for different types of warrants. Okay, so in the end, I'll be sharing about some of the traps that happens a lot of times in the stock market about warrants. And also I will be sharing some of the case study, which is the special cases in the stock market. Okay, so let's start. So what is technical analysis? Okay, basically technical analysis, the main objective of it is to predict the price movement in the future. Okay, why we have to learn technical analysis first before we learn about the knowledge of warrant? Because a lot of people, they only know that warrant is, is like I spend a little bit of money and I got a chance to win a lot of money. This is what they think. This is what they think. This is what they know. So they will just simply buy warrants. They will buy company warrants. They will buy the structural warrants without first analyze the stock movement of the mother stock. Okay, that's why we have to learn the technical analysis first. Then we study the mother stock, which is the underlying. Okay, if we think that the mother stock of a stock is going to go up, only then we consider the warrant of it, which we always call it as son. Okay, mother and son. Mother is the underlying, and the son is the warrant. Okay, be it structural warrant or be it company warrant. Okay, the son is always as the leveraging products. Okay, but a lot of people, they will straight away, go to the warrant without learning about technical analysis to use the technical analysis on the mother stock. That's why first we have to learn about technical analysis, and we don't need to go deep about it. We only need to know the main point of the technical analysis, which I will be sharing later, which is the support and resistance and the trends. Okay, so how the technical analysis is invented. Basically, technical analysis will be focused more on the Japanese candlestick. Okay, the Japanese candlestick, it is invented by a businessman in Japan. Okay, at first it was used to analyze the price movement of the rice. Okay, but until today, it's used for a lot of financial products such as forex, such as stock market, such as those cryptocurrency. Basically, all of those we will need to use technical analysis to analyze the stock movement. Okay, type of charts. We can see from this picture that basically there are a few types of charts, but what we will be focusing in will be the candlestick chart, which is the third one. The third one, yeah. The first one is the line chart. The line chart is very simple. Okay, if you want to use the line chart, I will suggest you to use it in the 1 minute chart. If you are intraday or scalping player, okay, you want a very, very, very fast moment reaction. So you can use the line chart in 1 minute chart, such as if you are catching IPO stock movement. Okay, there's recently a few got listed. Okay, so all those IPO stock, they won't show you any previous data. We call it historical data. You have nothing to refer. So when the market opens, when the price start jumping, jumping out, jumping down. So if you want to react in a faster way, you can use the line chart in a 1 minute chart, or you can use the candlestick chart in a 5 to 15 minutes chart. But before the 5 to 15 minute charts are formed, the only thing you can use is the line chart in a 1 minute chart. We call it tick chart. So when it goes up, the line start turning down, or when it goes down, then the line start going out. That's the moment that you should catch for scalping player. But it's another topic already. I just want to share to you that usually for day chart analysis, we will be using candlestick chart, which is the third one. Okay, the bar chart is also one of the types of the chart analysis being used more frequently in the old days. Okay, now still got people using it, but most of the people, they will study the candlestick chart. Okay, so what is candlestick chart? Basically, I believe that some of the audience here, if you want to learn about warrant, I believe you have had some of the basic knowledge already for the stock market. So the candlestick chart is that if the candlestick that day is a green color candlestick, it means that the opening price of it is lower than the closing price of it, meaning the closing day, the closing price is higher than the opening price. The day the stock price goes up, as simple as that, it will be showing green color. Okay, vice versa is that if the price of the share that day goes down, it will be showing red color. Okay, as simple as that. This is the basic knowledge. Okay, so here it comes. Usually when we analyze a stock, the very basic thing that we should do is to identify the support and resistance of it. Okay, so how to identify the support or resistance level? You can use it by identifying the most touches point through the horizontal line of it. Okay, which means that if a price is being touched a lot of times, So that price is a critical point. Okay, we call it critical point. It's a key reference price. Okay, if the stock price for now is trending above the key price will be acting as a support. Okay, if the key price, the horizontal key price is higher than the current price, so the key price is a resistance. Okay, as simple as that. We find the most touch point to identify the support and resistance of a stock. Okay, so how we trade? Usually, if we want to utilize the warrant as one of our tools to leverage our profit, so we will focus on trading breakouts. We will be trading breakouts. So how to identify the breakouts? The breakouts happen when a stock, it breaks above the resistance. It breaks above the resistance. Okay, so you imagine for the past few times, the stock always being rejected by a certain price. Okay, certain zone. It never goes up above the zone until one day, okay, be it due to good news or be it due to good market sentiment, be it for any reason, until one day, the price started trending up above the resistance zone. This is where the breakout comes. So when you identify the mother stock, which means the underlying stock has got a breakout, if you are a risk taker, you can focus on the warrant. You can focus on the warrant. This one we will share in the later part. How you choose warrant, how you choose structure warrant or structure warrant. If you want to choose company warrant, there's only a few types. Okay, warrant A, warrant B, warrant C. Okay, but structure warrant, there are a lot of types. Okay, so you have to choose in the wise way. Okay, so once you identify the mother stock is going to be perform well, only we start looking into the warrant. This is the sequence. This is a sequence. It's not like we simply go into the warrant without looking at the mother stock and the underlying stock, the movement of it. Okay. I saw a question, but I'm not able to answer for now because later we will have a Q&A session. So if the audience here has got any question, we can key in, we can type in the comment zone in the Q&A sections. Yeah. Okay. So basically is that we focus on the breakout, then only we leverage on the warrants. Okay. So after we learn about the support and resistance, we have to learn about the trend of it. Okay. Through this chart is clearly seen that this is a sideways trend, which means the stock price is going horizontally. Okay, it's not like going obviously going up or obviously going down. Okay, if you are trading warrant, we try to avoid sideways counter and also downtrend counter, unless you are buying the put warrant, but there is another story we will be sharing later. Okay, so this one is a very simple, very obvious uptrend. If we are buying a warrant which the underlying stock is trending in a uptrend basis, okay, so we will have higher chance of winning in warrant. If we buy the stock which is sideways or downtrend, the warrant only make us has bigger exposure to the loss because it's a leveraging item. If we lose in the mother stock, we will be losing more in the warrant. So we try to avoid, first lesson, we try to avoid downtrend, and also we try to avoid sideways trend. Okay? We focus on the uptrend counter, which the stock already break out. So this is one of the case. Let's say a lot of people, they like to buy the dip, bottom catching. I will always advise that if you want to catch the bottom, unless you are the trader, which you can focus on the price changes, like you have time to monitor the price, or you focus on very short-term spike, and you are a very disciplined player. Because let's say you think that this is the bottom, you want to catch it. Let's say if it breaks down again, you have to have the discipline to cut loss and exit. Like earlier, I think it's like CFN that time, CFM. If the audience here, you all check back the chart of the CFM, from the peak, when it started dropping, it drops a lot. But every day, I see got different types of public group in the Telegram. I saw some of the people that commented like, oh, they want to catch it, they want to buy the dip. But actually, if you really bought it, the next day you will be facing losses already if you didn't cut loss at a very correct time. Then every day you will be losing more and more than the previous day. So for us, we will not encourage people to buy the dip. If you really want to bottom catch, you have to have the time to monitor the market, or at least you set an alert for yourself. If you want to buy a downtrend stock, you don't buy the warrant of it. You don't buy the warrant of it because the downtrend stock already got a lot of risk. If you buy the warrant of the downtrend stock, meaning you leverage, you expose more of the risk on the downtrend stock. So this is not what we will encourage. Okay, so first lesson first is that we focus on the uptrend stock, the breakout stock. Okay, we avoid the downtrend stock, we avoid the sideways stock. Okay, so this is the result if you buy the dip. It's not always that you buying the downtrend stock, you'll be losing a lot of money. But we see a lot of case is that if you bottom catch in the wrong timing, then you will be facing much of the losses. Okay, so that's why in terms of probability, we will advise to avoid it at all, so that you focus on those high chance counter. Okay, so this is the first thing. So the next is that what is the counter that we want to look into? Is the breakout counter. Okay, it's the breakout counter. In this case, you can see the stock price has already challenging the previous resistance zone, which is the black color line. Okay, if you buy the breakout, it's not 100% you will win, but we say high chance you will be winning. High chance you will be winning. Okay, it's all about probability in the market. We just try to avoid more of the things that will bring us to loss-making position. Okay. Okay, so until here, if all of you okay, you can comment a 2 before we go into what is warrant. Okay, you comment a 2 for me so that I know you're okay for the technical analysis part. That's a very basic part of it. Okay, which is you learn about support and resistance just now, you learn about the trend just now, and you understand that if you want to buy warrant, you should buy only uptrend counter. Okay, that's the lesson that we learned just now. If you're okay, you comment a 2 for me. Okay, I'm seeing quite a lot of comments. Okay, so let's go into the next session, which is what is warrant. Okay, basically, warrant is a low capital, high risk tools. Okay, one of the products, we can say one of the products. Okay, why is it said that it's low capital? Because let's say if you want to buy VS, okay, if you want to buy VS, for example, the VS is trading at maybe 1.50 ringgit, for example. You don't have that much of money to buy VS, okay? But you want to get the exposure of the stock. What does it mean, exposure? The exposure as in you want to have the position in it. Okay, so if you don't have that much of money, okay, you can consider the sun of it, the sun that we just now mentioned, the sun as in the warrant. Okay, the sun as in the warrant. The warrant can be the structural warrant, the warrant can be the company warrant. Later we will explain what is the difference between company warrant and warrant. Okay, basically all the info here, we got it from the previous data. It's not the recent trend. Later you will also see the top graph case study, which is in 2 years back maybe. Okay, but the main thing that we want to share is that the knowledge behind it. Okay, so it's suitable for high risk player, because let's say the VS, the mother stock, it goes up 1%, for example, but the VS warrant, structural warrant, company warrant, it will go up in a higher percentage, maybe 2%, 3%, 5%, for example. So it's for the high risk player. The same goes to when the VS mother stock, the underlying, the mother stock, when it face losses, maybe it is dropped 1%. If you are a warrant player, you will have already made a loss of maybe 2%, 3%, or 5%. So it's like, leveraging tools. So it will be suitable for high risk player, suitable for the investor who don't want to fork out a lot of money to buy a stock, limited funds player. Okay. So also warrant holder do not benefit from dividend. Okay, like let's say VS maybe it declare dividend. So if you buy the mother stock, we call it mother stock, you'll be getting the dividends. But the warrant, you wouldn't be getting any. Okay, so it can be divided into company warrant and structured warrant. Later we will explain it. So how we able to gain profit? We can gain profit through buying call or puts. This one is only for the structured warrant. For the company warrant, it will move the same way as the mother stock. Okay. Okay, this is the one of the example we show first. This is a very simple case. The reason why we are sharing this is to let the audience knows that if you are buying warrant, you earn more than mother stock. Okay, you see, when the mother stock it goes out 10%, it goes out 10%. The warrant already goes out 50%. Okay, the same goes to if for example the VS mother stock it dropped 10%. So potentially, if you are buying warrant, you will be losing 50%. Okay, just for example. The main thing that we want to bring out here is to let the audience know that this one is leveraging tools. Okay, so just now I saw the audience ask about what's the difference between company warrant and structured warrant. Okay, here it comes. Basically, is that the company warrant is issued by own company. Let's say VS. Okay, VS want to issue company warrant, so VS itself will issue it. A structured warrant can only issue by the investment bank. So you can see a lot of structured warrant start from C. Okay, issued by different investment banks such as Maybank, CIMB, RHB, Macquarie, Kenanga, a lot of different banks. Later, I will also share who will be the best issuer that we as a trader, we always want to trade their warrants one. Okay, you have to avoid some of the investment bank, not to say that they are not good, just that some of them will be better. They provide live metrics. Okay, this one we will explain later. Okay, so you can see the underlying of it is the same. It's a company share. But the structured warrant, the underlying of it can be indexed, such as if you want to have the exposure to the Hang Seng Index, HSI, so you can buy HSI put or call warrant. Okay, but for the company warrant, the underlying is the company share itself, which is the mother share itself. Okay, so the code of it, this one is the one of the most important thing that you can learn to differentiate what is company warrant and what's structured warrant. Okay, the company warrant, it starts with W, WA, WB, WC. Okay, this one is company warrant, start with W. Okay, for the structured warrant, it start with C. You can see a lot of CCC. Let's say you go KLC screener, you search VS. Okay, you can see a lot of CCC. All the C is the structured warrant, meaning you are buying the product issued by the investment bank, not the company, not the company. Okay, so the expiry period, this one also another thing to take note. Okay, company warrant, let's say if you buy and you make losses already, you can still hold it. Because the expiry period is quite long. Usually it's few years time. But if you buy the product of investment bank, you must remember that it has a time limitation. Some of the people, they always like that when they make losses, they like to hold the share, right? They like to hold the share. If you hold company warrant, okay, and nothing happened to you. But if you hold structured warrant, you hold for 3 months, 6 months. The longer you hold, potentially the more you lose, because it has a time value. We call it time decay. Meaning the longer you hold, every day you will be losing some of the percentage one. Actually, all this info, if you go to the website of the structured warrant issuer, okay, such as an investment bank, such as you go to Kenanga or RHB, all those good issuer, we call it good issuer, you can see all the okay, Macquarie is the best one, I would say. You go to Macquarie website, actually every detail is already published to you, published to the trader. But a lot of people, they didn't want to study it, they didn't want to read it. They already published that, like let's say the warrant itself, let's say the warrant A or warrant B, structured warrant A or structured warrant B. You hold each day you hold, you will be losing how much? It already stated there. That is called time decay. Time decay. So structured warrant, you will be hearing a lot of people saying that, oh, you see, I buy this structured warrant, then in the end I total loss. In the end I total loss. Okay, why they total loss? Because they hold until it expired already. The longer you hold, the more you lose, as I said just now. So for warrant, we have to remember it is meant for trading purpose. It's not meant for holding purpose one. It's not meant for holding purpose one. Okay. Then the liquidity of the company warrant is by the market one. Is by the market, meaning market has got the natural buyer, like the retailer, the fund. Okay. Those we call it natural buyer. The natural buyer will form the liquidity. If the company run doesn't have anybody want to buy it, so the liquidity will be very little. But for the structured warrant, if you're buying the product from a good issuer, so they will ensure your liquidity one, as long as they have got the inventory on hand. Okay, later we will share. Okay, so for the settlement also not important because we won't encourage people to hold until the last day. Okay, but in case that you hold until the last trading day already, so the settlement of the company warrant is by the physical share, meaning you convert to mother share, you convert the warrant, company warrant to the mother share. Okay, but for the structured warrant, you cannot convert. You cannot convert. If the warrant in the end is in the money meaning that okay, the exercise price is lower than the market price. Okay, then you're able to get some cash back. Okay, so it's called cash settlement. But it doesn't mean that you will be winning. Let's say you invest 1,000, for example. In the end, you only get back 800. So you still lose. Because as I mentioned, the structured warrant, it has the issue of the time decay. Time decay. The time decay meaning the longer you hold, the more you lose. So you hold until expiry. Because I know the issuer friend. My friend is the issuer. So they always tell me that even though they do a lot of educational sharing to public, but still cannot bring the awareness one, because a lot of people, they tend to hold. They hold, then they make losses, either total loss or they get back only a little. So it's very difficult to beat the investment bank. That's why we have to bring in an idea that the warrant is for trading. Okay, it's for trading. It's not for long-term holding one. Okay, so here it comes. You can see this is the example of VS and toggle. Okay, you can see those start with C is the structure warrant. It's the structure warrant. You can see the bottom one. Those with start with W, it can be WA, WB, WC. Let's say WB expired already. The company want to issue a new one. It could be WC. Okay, when the WC expired, it can issue another WD. Okay, so the thing that starts with W is the company warrant. It's the company warrant. So you can see the top graph. Top graph a little bit special. You can see not only it has the C, but this one is a previous info. Okay, it also has the H1. The C1 is you think that the underlying will be going up, then you buy the C1. Okay, C1 is that you expect the warrant will be going into the same direction as the mother stock. The H1 meaning is a hedging. It's a hedging. You put it, meaning you think that the warrant, you think that the underlying will be going down in prices. So you buy a hedge. As long as the mother stock drops, the hedge will go up. It's a different direction one, Okay, but a lot of individual stock, it doesn't have hedge. It doesn't have the book warrant. Very seldom you can see it, unless for the index, like the HSI, because you can buy up and down. You can think that the Hang Seng warrant is going up, then you buy Hang Seng warrant call warrant. If you think that the Hang Seng index is going down, you can buy the Hang Seng index put warrant, which is the H1. Okay, so it happens most of the time in index. For the individual company, ready see one. Okay, but this part is to bring in the idea that how to differentiate the structured warrant and the company warrant. Okay, so this is another example. Just now we talk about the liquidity. Okay, so you can see here the company warrant is basically based on the supply and demand. Like I mentioned just now, it's based on the natural buyer. Okay, let's say the fund want to buy. Let's say a retailer want to buy. Okay, so they will queue at the buy side. Okay, let's say a retailer want to sell, so the retailer will queue at the sell side. Okay, it's based on the natural buyer one. If you have more money, you want to buy more company warrant, you can just sapu, you can just buy out. Okay, but for the structured warrant, it's not this case. Structured warrant, most of the time, you can see that the liquidity is quite systematic one. It's quite systematic one. Like for example, the Mercury warrant, because Mercury is one of the best issuer already. Other than Mercury, it will be Kenanga. Kenanga is the one of the best. We can basically say is the best local issuer. Mercury is the overseas issuer. Okay, so you have to remember these two issuer, Mercury and Kenanga. For me personally, I feel that both of them already good enough. You focus on these two investment bank, the warrant issued by them, the structured warrant issued by them. You trade those warrant is the good quality warrant because they will ensure the liquidity. You can see the second example. Okay, structured warrant is not purely based on supply and demand. It has a market maker inside. We call it MM. You can say it's a banker. You can say it's an operator. You can say it's a market maker. A lot of names for them. Okay, basically they are investment bank. They are investment bank who issued the structured warrant. Okay, so they will ensure that if you want to buy a structured warrant, they provide you enough liquidity for you to buy out. You can see, for example, the company warrant now. Let's say if you have a lot of money, you want to have a big exposure to the company warrant, but the seller side has only got 800 lot for 11.5 cents. So you just buy a bit, then no more seller for you to buy up already, no more stock for you to build a position. Okay, unless you want to buy out and out in a higher price, only you can build enough position. Okay, so it will be very difficult for a big buyer. But for the structured warrant, usually as long as the market maker has got inventory on hand, usually they will have inventory one when they first issue a share, unless the structured warrant, the inventory has been bought by the retailer already, meaning they have no inventory on hand to maintain the liquidity. That's another story. But overall is that structured warrant, it has the market maker inside, so they will ensure the liquidity. So if you want to have, if you want to buy a lot of, let's say the structured warrant, you find a good one and you find the Mercury one, for example, you buy 2,000 lots of 11.5 cents. Okay, after maybe few seconds, you will see it's auto refill already. It will refill 2,000 lots for you to eat up if you want more. Meaning they can keep supply you with the inventory as long as they have to ensure the liquidity. So if you want to buy 100K value of the structured warrant, you can buy. You want to buy 200K, 300K, or 500K, you can buy basically all in the same price one. As long as the market maker has got the inventory, they can supply you, no problem. Okay, understand about this part. This is the one of the major difference between the company warrant and the structured warrant. Okay, so basically is that, like we mentioned in the early stage when we started this presentation, is that we have to use technical analysis to identify the trend of the underlying stock. In this case, it's the mother stock. You have to know that the mother stock is going up or not. If you think that, or you believe that, or you analyze, you get a result is that the mother stock will be going up in prices. Only we look into the structured warrant or the company warrant. Okay. Another thing is that if you are a risk taker, you are a very short-term player, okay, fast in, fast out player. Okay, you can monitor newly issued company warrant. It's quite high risk, but this is one of the strategy that is quite work in the market one. For today, the presentation, we will be sharing all the experience that we have trading company and structured warrant. Okay, it's not like very theory. You know, I teach you term by term, what is this, what is that. it's not important. Some of the term is not important. Okay, what we're sharing is our experience. So for this, you see, some of the people, they might not share with you how you want to gain a bigger, like if you are a high risk taker, how you're able to get profit from the company warrant. But in this case, you can focus on the newly issued company warrant. Okay, if you just go and learn the terms of it, it will be too theoretical already. Okay, it might not help that much in actual trading. Okay, so let's see. Okay, later I will share one of the example of the newly issued company warrant. Okay. Okay. I see some of the Q&A, some of the question, but I will answer it in the Q&A sessions. Yeah. Okay. So this is one of the example. This one is the Legenda. We traded quite a lot of the mother stock back then. Okay, you can see. You can see the breakout point. The breakout point. Actually, when the mother stock breaks out, you can see the warrant, the company warrant, not really break out of the neckline, not really break out of the neckline. Why? Because, like I mentioned just now, for the company warrant is based on supply and demand. It's based on supply and demand. Okay, it's not necessarily means that it will follow exactly the same way. If the warrant has already moved out earlier, then when the mother stock move later, the warrant wouldn't move already because it has already, truly moved already. Okay, this is one of the case also in the real life trading. Okay, so let's see. This is another example, Franken. Okay, you can see this one is that basically you can see the mother stock. Okay, the mother stock has already, goes out. When it goes out, you can see the upside. The upside of the mother stock not necessarily same as the upside of the warrant one. Okay, sometimes the warrant it will go up more, or sometimes the mother stock go up more, but the warrant didn't move much. You can see from the chart, from the sideways zone, okay, you can see it's not necessarily follow exactly the same way one, because like I mentioned just now, it's all about supply and demand. It's all about supply and demand. Maybe Franken, the underlying stock, the mother stock, has already moved out earlier, or the warrant has already moved out earlier. So when the others start moving, although it's in the same direction, but they may not react in the same type of upside. Okay, this one is the newly issued company warrant that I mentioned just now. Basically, is that the newly issued company warrant is the new one. It's new one, meaning it doesn't have any trap chips. Trap chips meaning those retailer who bought in the high price. Some of the warrant, they like to goreng. Okay, so when it has volume, it spikes. A lot of retailers see the company warrant appear in the top volume list. They like to buy. Okay, so when they buy, maybe someday they got trapped. Okay, so when they got trapped in a long time later, when the company warrant start going back up in prices, it will face resistance because there are some of the retailer being trapped in a high price back then. Okay, but for the newly issued company warrant, it wouldn't have this case because it's new. It's new. Okay, it doesn't have any, we call it trap chips being trapped in a higher price. So the resistance will be lesser. It will be much easier to push out by the market. Okay, company warrant is about market player. It's about market player. So when it doesn't have much resistance, it doesn't have much pressure, it will be easier to go up in prices. Okay, for example, you can see this Scanwolf warrant. You can see the mother stock. We see the first three candles. Okay, the first three candle, it hit a resistance. It hit a high price. Okay, so here is the black color line, which is the resistance of it. But you can see the warrant. The warrant, when the second spike, it has already broken out of the first day highest price. It has already easily break out of the previous high price already, because not much trap chips up there, okay, compared to the mother stock. So you can see, even though they are moving in the same direction, but the upside might not be the same. Okay, let's say the mother stock, it hit the resistance. Although it goes out, but it hit the resistance, it stopped a bit. But the warrant, it may break the resistance. They may go into the same direction, both also go up. But the first one, it will hit the resistance. But the second one, it may break the resistance. Although both of them in the same direction, they go up. Okay, yeah? This part, understand? This is one of the example in actual real life trading. Okay, so we are more towards a practical player. So we will be sharing a lot of those real cases to you to learn more, to you to understand more about the market. Okay, if you think this type of the learning is better for you compared to the theory one, you comment a 3 for me. You comment a 3 for me, so that later I'll be sharing more of the real life, practical cases for you to understand more. Okay, or else I will be sharing more about theory part for you to know. Okay, actually for me, theory part you know a bit, then you have to understand the actual case, because actual case it really helps a lot. It really helps a lot. Okay, I have seen quite a lot of people comment 3. Thank you. So I will be sharing quite much about the real case one. Okay, so this case I hope you all understand what I mentioned just now. Okay, this one is also another real case situation that you may be facing. This is we call it the company which is expiring soon, Okay. Theoretically, that's why a lot of people they make losses in warrant, because theory and practical might not be the same. Okay, like in this case, for a company warrant which is closing to expiry, usually people will think that nobody wants to buy it already because it's near to expiry. So people will think that it won't go up in price. Why? Because if the company warrant is going to expire soon, and if you buy it, then you hold until expiry, you don't want to lose the amount that you bought in the company warrant already. So what you do, usually the only way people can do is that they top up, they exercise the warrant, they pay the exercise price to convert the warrant, to convert the company warrant into the mother share, so you can continue to hold for many years. Okay, like for example, you buy a company warrant. Okay, it has an expiry period of 3 years. So let's say you hold until end of the 3rd year already. Okay, so you cannot hold anymore because it's expiring soon. But you don't want to lose it. You don't want to sell in the market because the company warrant price has already gone down. So what you can do? The only thing you can do is that you top up, you pay extra based on the exercise price. It's all written already. It's all written in the term already. You pay the exercise price, you convert it to the mother stock, then you can hold as long as you want. That's why people think that the company warrant, when it close to expiry, no people will buy it one. Because when you buy it, you want to pay extra money to convert it to the mother stock for you to continue holding. That's why people tend to think that nobody will want to buy one, because if I buy, I want to fork out more money. Correct? But this is where the actual practical case happen. Some of the warrant, they will call goreng one. You can see this company, this warrant, it has no reason to up one. It's close to expiry. Okay, there's no good news. Okay, the mother stock also didn't go up in prices, but the warrant is big spike happened. Okay, then you have to think, what is the reason behind? The reason behind is same as what I said just now, because most of the time, company warrant is free for shareholder one. Okay, a lot of time they are giving bonus. They are giving bonus issue. Okay, they are giving bonus issue. So for example, you are holding the mother stock. In this case, Tenco, you are holding a mother stock. For example, many years back, you are holding a mother stock. Then the company proposed a bonus issue. The bonus issue might not be underlying bonus issue, as in it may not be the mother stock bonus issue. It could be the bonus issue with warrant. So the warrant that the shareholder get is free one. It's free one because it's bonus issue. Okay, so you imagine the major shareholder, for example, the major shareholder, okay, or a group of shareholders, they have got this free warrant, free one, and the warrant is expiring soon. And they don't want to top up more money to convert it to mother stock. Then how? There's a way, which is they or we call it some people or anyone, okay, they pump out the warrant price. When they pump up the warrant price, the warrant will be getting into the top volume list. Okay, a lot of retailer, okay, like me, okay, even me, we are an active trader, okay, but we will still refer to the top volume list, top turnover list, okay, top gainer list, okay, we will still refer to it. But usually for retailer, they will only focus on the top volume list. Okay, so imagine one day you see the retailer see in the top volume list, there's a company warrant spike high with good volume. Then what they do, they will usually chase in without studying the expiry. They will chase in. So this is how they distribute. This is how they offload their stock to the market with a good price, so that they don't need to convert it. The banker, we call it the banker, the operator, the shareholder, whoever, okay, the person, in the end, no need to convert, no need to pay extra money to convert the warrant to the mother stock, and no need to make losses because it can sell in the market for higher price. This is the actual case. So sometimes it happened quite a lot of time already. Sometimes you see certain warrant when they spike in price, you go and see the expiration only 1 month or 2 months left. So for that type of the warrant, if you want to purchase, if you want to buy, you can only go for trading one. You cannot go for like whole, okay? That's the actual case. That's the actual case. Okay. So we have done the company warrant part. So let's go into the structured warrant part. Okay. So the company warrant, let's refresh. Overall, is based on the supply and demand. Supply and demand. Like all the practical cases that I mentioned just now, is all about supply and demand one. That's why you can see some of the case, the mother stock goes up or the son goes up, but both of them, they although they are going up or going down in the same direction, but the upside ratio might not be the same. The mother stock hit the resistance, but the son may break the resistance. Okay, it's all about supply and demand. Like just now, even though it's close to expiry, okay, but if the market can buy out, it will still go out. Okay, but for the structured warrant, it's not about only supply and demand. You have to learn about the market maker. You have to learn about the market maker. Okay, so in this case, we have to focus on the live metrics. In this case, here comes the live metrics. The live metrics, what I'm showing now is the Mercury live metrics. There are only a few of the investment bank, the issuer, we call it issuer, has got the live metrics. Has got the live metrics. Okay, so the live metrics, you can go to their website. You can go to their website, such as the Mercury. You can go to their Mercury website. Kenanga warrant, you can go to their Naga warrant website. You just search, just Google Kenanga structure warrant live metrics. So it will pop up. It will pop up a link for you. Okay. Also, for the Mercury one, you just type Mercury live metrics. So it will pop up for you. So you just go in and you key in the structure warrant that you think you want to buy. Or you can key in the underlying, which is the mother stock. Let's say you think that CTOS will be going up in price, but you're still not sure that which of the warrant that you want to buy. You can go to the link and you search CTOS. Then it will show you a lot of those a list of structure warrant for you to choose. Then you can look at their term, such as whether it's near to expiry, whether the sensitivity is good, whether the effective gearing is good. Okay, it's like that. You can choose from there. Okay, but anyway, you can focus on Kenanga and also the Mercury warrant. These two basically for me, I think is very good already. I think it's very good already. Okay, so for the live metrics, what is the purpose? The purpose is for you to refer. For example, like I mentioned just now, if you have to first analyze the mother stock, you think the mother stock potentially it will go up in price. Only then you go and study the structure warrant. Okay, so let's say if you think that the CTOS mother stock will go 10 bits out, 10 bits, how do you know how much the structure warrant will go out? This is where the live metric comes in. Through live metrics, it will show you very detailed, like mother stock, when it's traded at certain price, how much would that be for warrant? It's like the banker tell you what is their cut. The banker tell you what is their cut. So you have to refer, or else you will just buta. Let's say you buy the structure warrant, you buy 10 cents. You think that it will go up to 20 cents, but this one is only you think only. In fact, you think that, okay, the CTOS will be going out 10 bits. 10 bits in CTOS mother stock will reflect in the structure warrant going out in maybe 3 bits. So you know that you buy 10 cents in the structure warrant, you can TP, you can take profit in 11.5 cents. This is the cut that the banker showed to you already. You have to refer. That's why we always focus on the issuer. They will show you the line metrics. Okay, some of the issuer, they don't have the right metrics. We cannot say that they are not good. I didn't say that. Just that we prefer those investment bank or those issuer who will give us live metrics. We like the banker who will allow us to see their cuts. As simple as that. Okay, like CIMB, Maybank, if I'm not wrong, they still don't have line metrics for now. So you don't know, like you buy this mother stock, you buy this structure warrant, although the mother stock go up in price, you don't know how much the structure warrant will go up to. Maybe it wouldn't move. Also potential will happen in this case. But if you refer to for those issuer who show you the line metrics, you will know what will happen. As simple as that. Okay, so another thing is that out of inventory, actually, you go to the website, you can see that maybe the Mercury will tell you, oh, what is the warrant that they have already out of inventory. Out of inventory, what does it mean? Like I mentioned just now earlier, the issuer will ensure that there's enough liquidity for you to buy or for you to sell. Okay, let's say just now the example that I showed, you want to buy 100K, 200K of the warrant. Okay, the seller side has got 2K lot for you to buy. You buy, then they will refill for you. You buy, they will refill to you. The same goes to if you want to exit, you sell to the buyer side, they will refill the buyer for you. You continue to sell down to them. They wouldn't scare you one. They are banker. They have enough stock. They have enough money. They have enough stock to sell to you. They have enough money to buy from you. Okay, but imagine one day the issuer don't have enough inventory already, because imagine a lot of retailer, they think that certain mother stock is going up, so all of them they buy certain structure warrant. So the issuer keep on selling the stock, keep on selling the inventory until one day they didn't have any inventory to control the liquidity already. So what will happen in this case? This case is that it will become the free float, meaning those retailer who has got the inventory, they are the seller, they're able to queue. Maybe in according to the live metrics, for now, the mother stock is trading at 1 ringgit. For now, if according to the live metrics, the structure warrant is supposed to be maybe 10 cents. But because the issuer out of inventory already, so the retailer who has got the inventory on hand, they didn't want to follow the line metric to sell. They can queue to sell at 11 cents. They can queue to sell at 12 cents. Okay, so that's the situation when out of inventory happens. Then the market maker, they will publish at their website one. They will tell you, oh, this structure warrant is already out of inventory. You don't buy it because they cannot ensure the liquidity for you already. They cannot ensure the fair trading for you already. They cannot ensure it will be traded as follow live metrics. Okay, that's why we have to avoid it. Like in this case, this one is one of the example happened back then. For now, basically wouldn't happen already. Okay, like we shared early of the presentation. When the structure warrant, it starts with H. It means that this one is a book warrant. What does book warrant mean? It means that you think the mother stock will go down, only you buy the put warrant. When the mother stock go down, the put warrant will go up in prices. But this is the case when the out of inventory happen. When the time, because all of the retailer, they only know about glove counter. Okay, they didn't really study about what is the theory behind the structure warrant. They don't even know what is put warrant, what is call warrant. They see Supermax has got a new warrant issued by investment bank. They just buy. But in fact, the new warrant issued is the put warrant. But due to the hotness of the market and the craziness of the retailer, that's why a lot of people buy until the inventory already out of inventory already. So the cannot ensure that it will follow the line metrics, cannot ensure that they have enough liquidity to control the movement. Okay, so in fact, even though the mother stock has gone up in price, the put warrant has gone out in price also. That is one of the very, very special case happened back then, because it's controlled by the retailer who has got the stock in hand. It's not controlled by the investment bank anymore because they don't have enough stock to control the liquidity. That's why, by right, when the mother stock go out, the put warrant, it should go down. When the mother stock go out, the put warrant should go down, because you buy put warrant is because you think that the mother stock will go down. Only you buy. But in this case, even though the mother stock go up, the put warrant also go up. It's quite a crazy case. It wouldn't have this in current year or next year already, because that time is like a lot of the market participant rate is higher than now, much higher than now. Okay, so this case is the actual practical case. Just want to share to you is that as long as the structure warrant has already out of inventory, we will suggest not to buy it, because it's not fair anymore. It's not fair anymore, which the banker will have already told you that, oh, this certain structure warrant already out of inventory, you don't buy it. But a lot of people, they don't want to refer to the website. Okay, a lot of info. Actually, the issuer, they're also being transparent to retailer. They also try to being transparent to the public, but just that we didn't use the info that provided. That's where the education comes in. We want to let the people know that there is information there for you to know whether such structure warrant is out of inventory or not. Okay, so the other case, the third case is that if the structure warrant is near to expiry. Just now, the case that we share near to expiry is the company case, company warrant case. Company warrant case, when they near to expiry, they might go in, just might. Okay, most of the time they will just lapse. Okay, people will just convert. But some of the case, people will like the big player of it. They don't want to convert. They don't want to focus on money. They will just go in. Okay, but for structure warrant, it's different case. It wouldn't have any case of goring. It wouldn't have, because, like I mentioned, it's controlled in the market player's hand. The stock is controlled in the market player's hand, because it's not out in inventory. This one is the case that expiration. Okay, when it's near to expiration, you can see the big side, which is the buyer side. In this case, you can see from the screen, the buyer side, there's no buyer one. There is no buyer. They wouldn't, the market maker, they wouldn't offer any price to buy from you. You see, the bid is the price that the market maker, they're willing to buy from you. The offer is the price that the market maker, they want to sell the share to you. Okay, so for the structure warrant nearing expiration, they no longer want to buy from you already. They no longer want to buy from you. That's why, back to what we said earlier, we wouldn't encourage people to hold the structure warrant for long. You just go for trading, because the longer you hold, the more you lose. So the market maker also know that the inventory on your hand, on the retailer's hand, is worthless. So they don't want to offer any money, any offer price to buy from you. That is the trick. That is the trick. Okay, that's why you always will hear people saying that, oh, I buy structure warrant, lead me to total loss. because nobody want to buy from you, even the market maker. Then how you're able to sell it out? You just have it in your hand, then hold until expiration, then out of money, then gone. Total loss. Total loss means that you cannot get in any money. You buy 100K, you lose all. If you buy mother stock, no matter how much you lose, you're still able to get back someone. 30% losses, 50% losses, you're still able to get back maybe 70K, 50K, 30K, for example. But for warrant, that's why it's very risky. If you don't know how they do or how is the trades, you hold until expiration. Most of the time, this is what my friend told me. So they are issuer. They say 80 to 90% above of the retailer total loss one for warrant, total loss. Quite sad case. But that's the case because a lot of people, they tend to buy and hold. They buy, then they focus on working, they didn't jaga the stock. Then in the end, when they realize, oh, it's almost expiration, and they're not able to sell out. In this case, you see, even the market maker also don't want to buy from you. So you have to remember, after this lesson, you don't buy structured warrant to hold for a long time. Like for 1 month, 2 months, 3 months, too long already, you'll be losing a lot. At most, you hold for 1 week, 2 weeks, because you will be losing the time decay. Okay. So after learning all these, okay, if you're able to learn something, you comment a 4 for me. You comment a 4 for me. If you learn something about company warrant, you learn something about structured warrant, you learn something about the actual cases, okay, you comment a 4 for me. Okay, before we go into the 3 habits of a disciplined traders. Okay. Okay. Thank you for the comment. So why we want to share about the habits of the disciplined trader? Because you trade mother stock, you already need to have discipline. But now you are trading warrant. Like I mentioned just now, like you want to bottom cash or this and that, you have to have discipline. Okay, the first thing is that you have to hungry for knowledge. So I believe all the audience here, I thank you for your time, because you are the type of player, you're willing to learn, but you're willing to study new knowledge, you're willing to listen to people. So after this course, I hope that you're able to understand something, be it company warrant, be it structured warrant, even though you're not able to remember all, but at least you remember 1 or 2 points, like the important points like I mentioned, or you don't focus on the expiry warrant, you don't focus on the out of inventory warrant, all these little points. As long as you're able to remember a few of it, it is very helpful for you already. You can avoid the total loss situation already. Okay, so I believe all of you here, you are a player who hungry for knowledge. Okay, the second thing is that you learn from mistakes. You not necessarily you need to learn from your mistake. You can learn from other people's mistake. Like I mentioned just now, all the cases, all the real cases that I mentioned just now, you can learn from other people's mistake, or people, okay, they didn't know about out of inventory, they didn't know about expiration, okay, they didn't know about supply and demand, they didn't know about life metrics. That's why they have total loss, or they made losses in stock market. So we learn from their mistake to avoid us losing. Okay, so the third one is that we always trade with a plan. That's the reason why I just now mentioned that you have to analyze the mother stock first before you go into the structured warrant. This point I already emphasized many times, because I've seen a lot of retailers, they're just chasing to the structured warrant. Okay, they see Hang Seng index going out, they're just chasing, they didn't study the mother stock. They just see the index keep on jumping, then they just, as in the structured warrant, then they just jump in. You might be able to win 1 or 2 times, but overall in the long run, if you don't have enough knowledge, you don't have enough complete plan, you will be making losses one. Okay, so you study the trend, you expect the movement of the mother stock first, the underlying first. If you think that it's going out, only you look into the structured warrant to buy it, and you have to know how much is your TP, is your take profit point. Let's say if you think that the mother stock will be going out 10 bips, okay, will be going out 20 bips, as in maybe 1 ringgit to 1.10, 1 ringgit to 1 ringgit 20 cents. Okay, if you expect that is the price that the mother stock might be going up to, then you look at the life metrics. You look at the my metrics, you see how much will the structured warrant be when the company from when the company price from 1 ringgit to 1 ringgit 20 cent. This is how you expect the exit plan. You have to plan first. It's not like we buta think that we blindly think that, oh, the structured warrant, it must go up to this price one. I believe it. So I just hope. It usually time decay happens, then the longer you wait, the less probability that it will happen to hit your TP1. Okay, so you have to know. And you can study the life metric every day because it will change slightly a bit because of the time decay. Okay, earlier maybe it needs the mother stock to go up 5 bits, but for now maybe it needs the mother stock to go out 6 bits, for example. Only that. It's like because your warrant has got lesser value already. So you have to monitor the life metrics. Okay. So this one is the company warrant conversion. The conversion here is to let you know about the calculation, but you don't need to study one because, like I mentioned just now, we go for trading. Okay, I will be sharing company warrant and I will be sharing structured warrant also. The structured warrant one, you just treat it as extra knowledge. Okay, so the company warrant one, basically the conversion is that the cost you buy the company warrant at the cost of you is that the exercise value and the warrant price. Exercise value is the point I mentioned, like the people want to top up. They want to top up the exercise price for them to convert into the mother stock. This is the top up price. The exercise price is a top up price. Okay, so the warrant price can be any price that you buy the warrant because the warrant always fluctuate. It's based on supply and demand. So maybe you buy the warrant in maybe 10 cents earlier. Now it's worth 5 cents only. Okay, so meaning your cost will be higher. Like that, the exercise price wouldn't change one. Okay, like in this case. Okay, you can see the maximum warrant. You can see the exercise value is 0.285, 28.5 cents. Meaning you buy the warrant already. Okay, you want to top up 28.5 cents for you to convert to the mother stock. Actually, you use the KLC screener already good enough because it will show you the premium one. In this case, it will show you premium. You see the premium percentage can already. The premium percentage in this case is 20%. Meaning very simple. Meaning it tells you that for now, if you buy the warrant and convert it to the mother stock, compared to you directly buy the mother stock at 33.5 cents, you will be paying 20% premium more. As simple as that. So you don't need to convert. Okay, because you buy the warrant and you convert, you pay more compared to you directly buy the mother stock. You see, 12 cents, you add 28.5 cents is equal to 40 cents already. 40 cents for you to get the mother stock compared to you directly you buy Mastron for market is 33.5 cents. That's why you pay more already. Actually, the KLC screener already calculated for you. Okay. This one is the structured warrant conversion. This one we don't need to go deep because, like we mentioned just now, we suggest you don't go for settlement. If you go for settlement, you have to hold until the last day, which most of the time you're making losses one. You just focus on the trading. Just focus on the trade. In this case, you can see the summary here. Advice is that most warrant conversion company structured warrant tend to incur losses one. That's why you focus on trading but not convert. Or you focus on this point can already. Okay. Then here is some of the cases which is a trap of it. Special case. You see, this one is that when the mother stock of the MMAG, it keep going up back then. Okay, until you can see the premium of the warrant is negative almost 50%. Negative almost 50%. Okay, it will attract a lot of people to buy because it thinks that, oh, I buy warrant and I pay the exercise price to convert it to mother stock. Compared to I directly buying mother stock, I will be having negative premium of 50%, meaning I gain 50%. It will be very attractive. That's why people will buy the company warrant and they will convert. But they forget conversion take time. Conversion take around 2 weeks time. So within the 2 weeks time, if the stock price drop, then you game over. Like in this case, you see, before you get the share, if you convert at the point of the 50% negative premium at that time, you thought that you will be getting 50% gain because you think that you get the share already, then you sell in the market to get a 50%. But in fact, before you get the share, the mother stock already start going down. You can see the chart of the mother stock. After the peak, for the next 2 weeks, it keep going down. So the go down percentage is already more than 50%. That's why this is what we call negative premium trap. It happens quite a lot of cases also. If you see the negative premium is more than 30%, this one basically is a trap already. When it goes up to 30%, 40% and 50%, this mother stock are basically closing to crash already, almost want to crash already. That's why it will attract you through negative premium to get you in. Okay, so this is another example. Also special case. This example is that you can see, even though in the second part of the mother stock, it still continue go up in prices, but the warrant, the upside of it is gotten limited already because during the first phase of the markup, it has marked up too much. You can see the first 3 candles of the when the volume comes. Okay, the mother stock go up one day, the second day is the red color. But the warrant, it go up one day, the second day is still a big green color candle. It means that the warrant has already, we call it churi jalan. Okay, it has already, tapped one step earlier than the mother stock. That's why when the mother stock, in the end, when it continued to go up in prices, the warrant wouldn't follow already. This is one of the special case also. Okay, the other one is the Ramzo. You can see the Ramzo. Okay, when the first markup, first pull out of the price and the retracement of it, the retracement has already hit the gap out zone. But you can see the warrant, the retracement of it does not make the warrant price back to the breakout zone. So this is what we say for the company warrant. It's all about supply and demand. It not necessarily means that the company, the share price drop to net line or drop to support, then the warrant has to follow. Although they are moving in the same direction, they drop together, but the ratio, but the room that they drop might be different. This all the special cases happens a lot in the real time. Okay, so this is another example. You can see the Toyo one. You can see the mother stock is going up, or at least it doesn't drop. But you can see the warrant continue to drop. Why? Because it's closing to expiry. That's why we wouldn't encourage you to buy the expiry warrant one. It's too dangerous already. Okay, so here we are. After this presentation, if you understand some of the case, you comment a final 5 for me. You comment a 5 for me. Okay, let me know that after this session, you at least know some of the actual cases. You at least know some of the knowledge about company warrant, some of the knowledge about the structure warrant. You comment a 5 for me. Then we will go into the Q&A session. We have got 10 minutes. Okay. Let me see. Okay, thank you for your comment. Thank you. Because we hope that through this actual educational session, we want you to to learn not only for the theoretical part, we want to learn about the practical part. Okay. Okay. What's the difference between structural warrant and normal warrant? Okay, this one I shared in the presentation already. I think. Then the second one is the, let me see. Warrant exercise price to spark the warrant price. Actually, no. Actually, the warrant exercise price has already been fixed since the first day one. So it wouldn't really affect a lot. It wouldn't really affect a lot. Okay. So the third question is that can one trade structure warrants and security charts? Okay. Basically, one of the audience asked that, okay, can a person trade structure warrants successfully with no knowledge on the terms like those like delta, gamma, theta? All these things is the theory part. It's not that I don't want to share. It's that we in the actual trading, we rarely focus on that one. Okay, like the theta. It basically is the time value, the time decay that I just mentioned. But we trade in another way. We call it time decay. But if you want to focus on those very deep terms, because my friend is actually the issuer. different bank one, different bank issuer is my friend. So I already got the very direct answer from them. They teach, they share to public, but it's not that you have to know all those terms for you to be successful in the trading. Like I mentioned just now, okay, you have to focus on live metrics. But if a person, they know all the terms, but they don't know how to use the live metrics, it's a waste, it's a waste. So we only focus on those things that we think is really important in the market when trading, live metrics, okay? Like maybe we avoid our inventory structure warrant, we avoid those near to expiry warrant. We focus on, you can focus on sensitivity. Sensitivity, okay. If you are a short-term trader, sensitivity, no need to be too much. Okay, sensitivity is that you prefer those like maybe 5 ticks one for short-term trading, meaning the mother stock move 5 ticks, then the structure warrant move 1 tick. They want okay. If you focus on those effective gearing is too much one, then it will be the case that the mother stock need to move a lot, only the structure warrant will move a bit. So that's why we focus on those actual trading thing. But it's good that you know more lah. Like if you know about the sensitivity, if you want to imply volatility, all this delta also. Delta rule of thumb is that below 20 and above 80 you don't buy. Also my friend told me one. Okay, why? Because above 70 or above 80 is already in the money. So a little bit movement of the mother stock will lead the structure warrant to move a lot. Okay, all this part that I mentioned just now, some of the audience might not understand because the audience that asked just now, I believe is a experienced trader. That's why I answer it in a different way. All the terms that we are actually checking out, some of the audience might not understand, but it's okay. It's okay. You just focus on the presentation that I just made, that I just done. It will be enough already. Okay. Let's see. Okay, I'll see the other question. Will the market maker manipulate the mother's price to influence the structure warrant price to their advantage? How can a retailer be the market maker? Okay, this one, I have to say, you don't treat the market maker as your enemy. This is a misunderstanding in the market one, because actually market maker is helping you. A lot of people, they think that, okay, market maker is my, opposite of me. It's like, I want to win, I have to win from them, so they want me to lose kind of thing. Actually, it's not the case. In fact, they are doing hedging. This is the actual case I'm telling here. Some of you might understand, some of you might not. It's okay. In fact, if you buy their structure warrant, they will do hedging through buying the mother stock. So you don't think that they want to make you lose. No, you also no need to think that you want to beat them. It's okay one, because you are in the same boat. So they also hope you win one, because let's say you buy a certain range of their structure warrant. They have their in-house calculation to calculate how much of the mother stock that they need to buy in order to hedge your position. Okay, so you don't need to worry that they are your enemy. Okay, and in order for you to win money from them, you call it win money from them. For example, you have to focus on the line metrics. I mentioned just now, you have to know if you think that this company, this stock is going out, you want to leverage on the structure warrant. How much in that this company will be go up to? And based on the price, you track back the live metrics. You will know that agak how much the structure warrant will go up to. This is where we can make money, because everything that we do, we have got a plan. It's like when I want to buy a structure warrant, right? I also need to do a lot of study one. Let's say I study this mother stock. I think it's okay. Then I have to find which company warrant suitable for me. I will find Mercury warrant, I will find Kananga warrant. Basically, I focus these two. If the company don't have good Mercury warrant, I will see the Kananga warrant for me. Okay, that's right. I will need to see, okay, how much that I think the company will go up to. Then I will look back at that metric chart. Then I think, okay, the structure warrant now I'm buying 10 cents. I expecting it to go up to 11 cents. I have 10% profit, for example, like that. I have to assess first. I have to study everything first before I really click the button to buy the structure warrant. So you don't need to beat them when they are in your same boat, because you buy their structured warrant, they will buy mother stock, they will support mother stock. So sometimes you can see that if you are a big player, unless you are a big player, you can see this. If you buy the position big enough in the structured warrant, you can see the mother stock movement. This is another trade that I'm sharing with you all, but they will only be useful for big player. You buy sizable amount, sizable position in structured warrant. At the same time, you will see some buyer coming in their stock already, which is the investment bank. Their automation algo. This part already deep already, but I hope that some of you will get something here. This one too deep. Okay, but overall is I want to share. They are not your enemy. They are your friend. Yeah, that's why they don't mind to share a lot of knowledge with you all. You can see in their website they publish a lot of information one. Just that whether the retailer want to use it or not. If they want to win money from you, they wouldn't have published so many public info for you all to learn. That's the point. Yeah. Okay, I hope you get something. So last two questions. Why did you say when it's in the money it's not worth? Okay, it's not that it's not worth. It's that when it's deeply in the money, the negative, you mean the company case, the company warrant case, right? Which means that one is, we call it too good to be true. Too good to be true. Okay, is that, for example, one of the example they are showing just now, MMAG. Another one is G packet. G packet, you can look back if you have the previous data, like you can look back earlier also. Yes, the negative premium of the company warrant up to 50%. Meaning, if you buy the company warrant and you pay the exercise price to convert it to mother stock, and you're able to sell the mother stock in the market right now, you can able to earn 50%. It is like too good to be true. So the trap comes is that when you convert it, it will have 2 weeks time. The 2 weeks time, the mother stock already dropped a lot, which when it's dropping, you cannot do anything because you haven't gotten the share. You haven't gotten the share. So that's where a lot of people, they will lose. If the negative premium, we call it standard one, maybe 3%, 5%. Usually we will see it earlier, maybe Lai Hong warrant, always negative premium 1 to 2% one. But now I'm not sure whether it still got. Okay, but if those are negative premium 30%, 50%, it's too good to be true. Okay, so we have to differentiate. It's not like all negative premium one is bad. Okay, so those starting with C are call warrant, and those starting with H are put warrant. Correct. And for the company, for the individual company, not for index, usually it will only have C. It will only have call warrant. For the put warrant, only for, usually it is for the index one, like the Hang Seng Index, S&P 500, like those. Okay. So if you are trader focused on the company warrant, focus on the individual company, you just focus on call warrant. Okay. So I hope I answer all of the question. Let me see. Okay. Do I still have time to answer a few more questions? I see from the.
Yes, sure.
Okay. Okay. I continue because I scared not enough time. So if you all have no question, then I will just answer 2 more. Okay. From Mr. YC, I have some question. Okay. Is the structured warrant price changes will surely follow line metric? I would say yes. If the issuer is we call it reputable or the well-known issuer, they will follow line matrix one. If they didn't follow, you can even call and complain one, because they want to protect their names. That's why, like I mentioned, we as a trader, we as a full-time trader, we as the trader, we want to make money from market. That's why we have to find those product which is good one, only we trade. That's why I only trade those structured warrant has got the line matrix one. And the line matrix one, like I mentioned last time, you focus on Kananga and focus on Macquarie. Okay. Although others still also got RHB, Affin Bank also got, but they are new. They are quite new. The longest one is Macquarie. Then after that is Kananga. So you go for those, we call it good branding one. They also don't want to make their name back. Okay. So they will they were high chance they will follow one. It's rarely that they didn't follow. Quite rare. I didn't really face any, I would say. If I only face is that when the mother stock maybe it clear the seller zone for one time, for example, clear for maybe few seconds only, then the algo not enough time to react. Then only got the probability that is not follow for maybe few seconds only. The rest of time okay. And this is the case when they got the inventory. If they have got no inventory, like I mentioned this out, in the case of out of inventory, then we cannot expect the market maker to do their work correctly because they don't have the inventory on their hand to control the liquidity already. So if we are mentioned about normal case, they will ensure they will follow temperatures. Okay. Why structured warrant market depth are nothing special before market open and after 4 and 50? Okay, actually you can. Okay, let me finish the question. Sometimes okay, actually it's like this. Okay, I mentioned just now the market maker, they will queue for you. They will queue for you. Okay, but you have to find the good quality, good name, we call it issuer. If you focus on those issuers, which is like for example, only like not saying that they are not good. It's like CIMB, Maybank. I didn't see much queue there, you know. So you can focus on the Macquarie one. Okay. And the other thing is that usually after 4:43, if I'm not wrong, 4:43 p.m. The operator, they will stop market making activity already. Okay, they will stop market making activity already. Okay, so the last trader price will be based on the retail price. Okay, they are there to control the liquidity. So then they are not really like want to control the prices like want to push out or push down. No, they will follow the market line matrix. The line matrix you can refer like the mother stock traded at what price, then the warrant will be traded at what price. It's all followed one. Okay. Let me see the third question. Some of the structured warrant price if you're last than 500 lot, is it able to trade? Oh, I wouldn't recommend that you trade the structured warrant which the liquidity is little. Unless it's the case that if you clear the 500 lot, it will refill straight away. Then okay. Meaning they will still ensure the liquidity. They will still ensure the liquidity. Some of the case, yes, some of the case, no. Like last time I traded. If you want to trade for a normal gain, you can trade the CIMB or the Maybank one, the structured warrant, because they have no life metrics. So if the mother stock go up in 5%, maybe the warrant can go up 20, 30%. But actually, no much people joining in. So in the end, I still focus on the company, the issuer who has got live metrics. Easier for us to refer as a trader. Okay, so even though the lots is little, as long as you can ensure once you buy out the lots, then it will refill for you to buy again. You buy, it will refill. You buy, it will refill. Then okay, still okay. They are still doing their work. Okay. The last question I think is some of the structured warrant are very low volume. Is it able to trade this kind of structured warrant? Yes, actually, a lot of people, they have the misunderstand. They feel that they want to trade the structured warrant, they will go to filter most traded volume one. Actually, not necessarily. You can focus on the company, the structured warrant who has got the line metrics, and the line metrics you think suitable for you one. It's not like the most traded, most active structured warrant is good one, because some of the structured warrant is active, but it's no line metrics one. It's like all retailers just buy up and down. All retailer one. And for example, if the issuer want to play, we call it play busok, okay, they can just throw down because you don't have line metrics to refer. They want to, even the mother stock go up, they don't want they can control the structured warrant, don't make it out, also can. So it's not necessarily means that no volume, you cannot buy. You have to focus on the line metrics. But if those like really no volume one and you see their expiry date is like maybe 2-3 months, maybe you can avoid. You go for those new one. the new one with the line matrix one better. Like for example, the Mercury, you can definitely confirm that they will follow the line matrix one, but the time decay of their warrant is a little bit higher compared to other warrants. There's a little bit tweaks here and there, but as long as they can ensure they play fair for you following the line matrix, then okay. For me, it's okay because I'm a short-term player. I didn't hold for a long time. Okay. Okay, 2 more questions. I make it short because we are, not enough time already. Okay, can you share what is your best warrant trading experience and what you bought it? I didn't really remember because I trade company warrant, I trade structure warrant, but overall is that okay. I do face some case is that okay. I talk about the loss one. I don't talk about the win one because win one everybody can talk. Okay, so I talk about the loss one. The loss one is that you have to control your risk. Like let's say if I see the mother stop, it goes out before it reaches my TP and it start coming down. Maybe I'll wait a while. Okay, most of the time I will have sold half already. But overall, let's say if I still got position on hand, okay, I will be monitor very closely that whether it dropped with my cost. When it dropped to my cost, maybe I will just throw already because you want to, because structural warrant is a penny stock. It's a very penny. It's like 1 bit you're already making 5% loss. Okay, so let's say if you just leave it for long, maybe my loss will be maybe 5% to 10%, 10% to 15%. So the case I will keep my stop loss maybe just 1 bit below my price, or usually I will just sell back at cost. Okay, so I hope this one brings a better value for you because talking about gain, a lot of people can talk, but talking about the how you control the risk, I believe there's not much people in the market willing to tell you. Okay, I hope I answer your question in another way. Okay, so the last is that can you please repeat the delta part? Okay, the delta is like this. The delta below 20 is that the stock price the mother stock need to move a lot. Only the structure weren't able to move a bit. Okay, so we will skip the structure warrant, the delta below 20, because the mother stock need to move a lot. The sensitivity need to be very high. As in, it need to be a lot of bits. Only you can have slight movement in the structure warrant. So we wouldn't hold that kind of structure warrant. The other way is that if the delta more than 80, in theory it's more than 80, but for me, personal trading experience, more than 70, we wouldn't be looking into it because it will be oversensitive. It will be usually in the money structure warrant. Meaning the stock price move a bit, the mother stock move a bit, the structure warrant also move a bit. Move a lot. Meaning your up down is a lot. It will be very difficult for you to control the risk, even though you can expect a lot of gains if the mother price move a lot. That's why it's like beyond our risk control. That's why we will suggest you to avoid delta below 20 and the delta above 70. Okay, I hope I answered the question. And lastly, okay, if you think that the presentation is good, can you please comment a 6 for me so that I know you all really learned something today. Okay, thank you very much. I hope you enjoyed today. We are a little bit overrun, so I pass back to Stella. Thank you.
Okay, thank you YC for his insightful sharing. Hope you guys have learned something today.